Hello everyone, welcome back to Road to Ownership. We're diving deep into real estate today with a focus on navigating your first mortgage, terms and tips explained. If you haven't subscribed to this channel yet, now would be a great moment to do so. So let's jump right in. What is a mortgage? Simply put, a mortgage is a loan that you take out to buy property or land. It's a critical tool for anyone looking to own a home, as it enables you to spread the cost of this significant purchase over a number of years, usually between 10 to 30. But why is a mortgage so important? Well, unless you've got a spare few $100,000 lying around, you're going to need some financial assistance to buy a home. And that's where mortgages come in. They give you the ability to make that dream of owning your own home a reality. Now, not all mortgages are created equal. There are different types of mortgages, each with their own pros and cons. The two most common types are fixed rate and adjustable rate mortgages. A fixed rate mortgage has an interest rate that stays the same for the entire loan term. This means your monthly mortgage payments will be consistent, making it easier to budget. On the other hand, an adjustable rate mortgage has an interest rate that can change after an initial period, usually 5 to 7 years. This could mean lower initial payments, but also the risk of potentially higher payments in the future. There are also other types of mortgages such as interest-only or payment option adjustable rate mortgages, but these are less common and come with their own set of complexities. Now that we have an understanding of what a mortgage is, we'll look at some of the key terms you need to know. Or its mortgage jargon can be tricky, but it's essential to understand these terms to make informed decisions. So let's break down some of the key terms you'll come across during the mortgage process. First up is principal. This is the original amount of money you borrow to buy a home. If you're buying a $200,000 house and you put down a 20% down payment, your principal would be $160,000. Next, we have interest. This is the cost of borrowing money, expressed as a percentage of your loan. The lower your interest rate, the less you'll pay over the life of your loan. Then there's the term. This is the length of time you have to repay your loan. Typical terms are 15 or 30 years, but other options may be available depending on your lender. Amortization is another key term. This is the process of paying off your debt over time through regular payments. An amortization schedule outlines your payment timeline, showing how much of each payment goes toward the principal and how much goes toward interest. Escrow is a term you'll hear a lot during the home buying process. It's an account held by a third party that holds funds for property taxes and insurance. Your lender may include these costs in your monthly mortgage payment and then pay them on your behalf from the escrow account. And finally, there's equity. This is the difference between your home's current market value and the amount you still owe on your mortgage. As you pay down your principal, your equity increases. With these terms under your belt, you're already becoming more of a mortgage expert. Now let's move on to the process of getting a mortgage. Getting a mortgage might seem daunting, but once you understand the steps, it becomes a lot more manageable. Let's break it down. Step 1, the pre-approval process. This is where you sit down with a lender and discuss your financial situation. They'll review your income, debts, and credit history to determine how much you can afford to borrow. This letter can be a powerful tool when house hunting, as it shows sellers that you're serious and financially ready to buy. Moving on to step 2, house hunting. Now that you know your budget, it's time to start looking for your dream home. Consider factors like location, size, and amenities. And remember, patience is key. It might take a while to find the perfect fit, but it's worth the wait. Step 3, applying for a mortgage. Once you've found the home you want to buy, you'll need to formally apply for a mortgage. This involves providing more detailed financial information to your lender, who will then assess your application. This process can take a few weeks, so it's best to start as soon as possible. Finally, step 4, closing. This is the last step in the mortgage process. Here, you'll sign a lot of paperwork, but most importantly, you'll sign the mortgage agreement. This document outlines your loan details, including the interest rate, monthly payment, and term length. Once signed, you're officially a homeowner. But remember, getting a mortgage is not just about following steps. It's about making informed decisions that will impact your financial future. This is why it's crucial to understand the terms of your mortgage and to choose wisely. Now, you know the steps to securing a mortgage, but remember, choosing the right mortgage is crucial. Let's explore some tips on doing just that. Choosing a mortgage is one of the most important financial decisions you'll make. Here are some tips to guide you. First, don't just settle for the first offer you get. Shop around for rates, as even a small difference in interest can save you thousands over the life of your loan. Second, consider your future plans. If you expect to move in a few years, a fixed-rate mortgage might not be the best choice. Instead, an adjustable rate mortgage could provide lower initial payments. Lastly, understand all the costs involved. This means looking beyond the interest rate and considering things like closing costs, points, and fees. Remember, the cheapest rate doesn't always mean the cheapest loan. It's essential to understand all aspects of your loan agreement before signing on the dotted line. Armed with these tips, you're ready to navigate the mortgage process like a pro. That's a wrap on our guide to navigating your first mortgage. We've demystified key mortgage terms, walked you through the process, and shared tips on choosing the right mortgage for you. Remember, the journey to home ownership is smoother with a clear understanding of your mortgage. If there's a topic you'd like us to cover in the future, please drop it in the comments. Your home ownership dreams are within reach. Don't forget to share and like this video if you found it helpful. Thank you.